Our next speaker is a luminary in education technology. Ray Henderson is the founder and the managing director of Lessons Learned Ventures, a strategic advisory and investment holding company. He has an extensive history as an entrepreneur and an operating executive, including roles at Pearson, Angel Learning, and Blackboard. In recognition of his sustained industry support for IMS standards and development and adoption, Ray received a Lifetime Achievement Award from IMS in 2010. And Ray currently serves on the IMS Board of Directors. Would you please join me in welcoming Ray Henderson?
Thank you for that very kind introduction. Again, thank you all for coming. I do have some history with this organization. So I thought I'd start, I was going to say I was going to start with my credentials, but I know that's not quite the right term in this audience, so I'm just going to pull her down to metadata. I've forgiven IMS for giving me a Lifetime Achievement Award before age 50. You know, they sort of sent me away a few years ago. It's been 5 years since I had a proper job and had lost my credential with IMS. As was noted, I've logged a few decades in executive leadership roles in ed tech. I was one of the guys that was around at the time that the web and the first browsers were really making it into education. I was building product for those, and so I've witnessed a good amount of it. It's amazing how much the industry's grown. I was one of the people, the reason I'm here and I got the Lifetime Achievement thing in the 40s was I spent 12 years like twisting arms in the early industry to get people to line up around some of the early standards and helped get this going. I'm now returning after a bit more time, away and reflecting on the industry. I'm returning to the board and thinking about, education standards a bit differently from having had different experiences. And so the title of this talk was around lessons learned in the gig economy. Since I left a proper job, 5-6 years ago, I've had this series of things that I've done, all of them advisory, none of them, with the level of responsibility that you all have. But just sort of checking in with companies and trying to give some advice. And so I've tried to distill out a few things. And of course, this part of the talk, you've heard from education thinkers and instructional designers and policy leadership. I'm going to represent some commercial topics to kind of bring things to the end of the week and in some ways introduce the rest of the panel. I'll dwell a little bit on some business model and things like that today. So anyhow, so it's this lightning talk that led me to say I'm going to do a summary of all market trends in one slide. So this is the whole market for ed tech. So of course it's crazy to try to come up with a haiku for areas of the market, but I thought I'd do it just for fun. My K-12 statement on broad market landscape, having participated in this, is supplemental as eating basil. In my day, the Pearson's K-12 organization, which was one of the leaders in this basil publishing era where things were program-driven, statewide adoption and whatnot. In my day, Pearson's division in that area was worth over $1 billion. It sold this year for $250 million as Pearson changed their focus and refocused they've refocused and they've bet on different areas. And so if that isn't a sign that there's some change in this market, I don't know what is. Over the 20-year time horizon. And this comment supplemental, I mean by this the digital supplemental products, very interesting products in K-12. Newsella is one that is a great example of a product that just exists around changing forms of consumption and things like the ESSA regimen that's happening in K-12, the regulatory climate that requires you think differently about education. Those products that were born in the back of the room on the computer for shared time and whatnot, but also we're born with a presumption about a usership, a relationship with the user being more singular. Well, it turns out they've scaled. And so if you look at the new vanguard in K-12, many of them came from that digital supplemental era. The Newsela is one example, but there are loads of others, Learning A to Z and Explore Learning in STEM. There's digital curricular companies like Achieve 3000 that were born digital. Curriculum Associates is a great market leader. Renaissance is a company very purely focused on digital, and it's just completely changed. The other interesting thing about it is the other thing the publishing Basel used to do that was finally disrupted, was the teacher supplements piece. And there a new market was created. Things like teachers pay teachers. Teachers just said, let's get this done. Let's just create this marketplace and we'll share the pieces that we don't get. The combination there is pretty interesting. I think it is a better support for the way people really want to teach in K-12. I think it's a bit more fluid. These things are also becoming more possible as a result of some of the work done in standards, but I'm probably going to run over. For higher ed, my provocative statement, I'll mention curriculum. We have a panel today on the leading thinkers on curriculum in higher ed. It is also getting disrupted. The changes, print to digital is table stakes in talking about how things change. It's a fascinating case that we have unfolding in U.S. higher ed. I mentioned Pearson's divestiture. They're making big investments in focuses. One of the leaders of those will be with us here in a few minutes. Cengage has a very kind of a Netflix-like model. Probably butchering that, or it's unfair in some way, but as people describe it in the market, we have real change going on in curriculum. But course versus program is the one that I think is a more interesting and lasting trend. So much of the early history of ed tech has been course denominated. We were focused on the course and the course environment and how you deliver a course and all the elements of assignment to a course and all that. But as people in this room know, as we think about data integration in the broader scope, so much of what education actually delivers is program denominated, not course denominated. And so the course versus program focus in the industry is rebalancing. You see in the private equity realm, you see campus labs, which is an assembly of things that are in the program arena. Elements of that watermark, to me, is another thoughtful assembly of what happens when you think about education programs and running them at scale. There are other interesting young companies working in this space, but I think that's a new theme, I think, as things have stabilized in like the LMS wars and whatnot. You think about what's happening. That's a thesis. The gap isn't a market that we've talked about that much. I'll credit Ryan Craig at University Ventures, who he's got a great newsletter. I pay attention to. This guy's a deep thinker about education. He renamed this market. He points out the gap between higher ed and employment. This is an area I'm tempted to say we're just not ready yet. That there's a renaissance going on in workforce, and how ed tech is serving it. There's obviously huge new focus in this area. I think it may not be a renaissance. We have to see. There's a lot of painters out there. We have to see if there's a Michelangelo in the bunch. But there's a lot of activity, and it's very thoughtful. We at least have Workforce 2.0. I'll give you one example of that in a moment. In corporate learning, I think we have another inflection point. I think things are good there. I think the market is recognizing what's different about corporate learning and other types of e-learning. I've got the one distinction, micro, macro. Sometimes you just want to know, like, hey, what's in the service bulletin, and immediately let me click through to how does that change how my workflow is as I'm doing this repair. And I want learning that's embedded at a micro level in how I work. That's very different than trying to train me on quality control or sexual harassment or something else. I think that market's starting to shake out around that change and distinction, and it's improving. I think the companies are, I think there's a stronger group of young companies in corporate. It's been fun to watch. I mentioned workforce and this gap. I'm going to isolate on a company. Ryan Craig developed this company, Reviture. I was involved in diligencing this company recently. That's how I learned about it. I've clipped something on their webpage. We've seen a lot of focus on IT training whenever we talk workforce. That's an example that comes to mind often. It's an area there's been a lot of investment. Trilogy in the OPM arena recently. There's been people who've tried to apply the income sharing agreements to IT training, also because it's a good candidate for that type of thing. Reviture is a company that said, what if the employer paid? And we built the whole system around the concept that the employer is going to pay for the reskilling and upskilling of people that need to have that on-ramp. And so they changed how hiring is done. So I think it's an example of some very different and interesting things that are happening in this market. I'm going to take a moment to spotlight on AI. This is just, I'm just going to use the speaker's privilege here to address colleagues in the marketplace on AI. It's an exciting time, right? There's so much promise that's coming with AI. Nearly every young company is beginning to think about this, AI, machine learning, deep learning, whatever you think about, and applications to education. I have a watchword for us. We have to learn some lessons as an industry. We just had one called Newton. If you don't know the story, Newton is a company that was overhyped and underdelivered, and it got its comeuppance in the market for having done that. It set expectations it couldn't meet around things that people were excited about. And it's a sad story because there were a lot of good people there who did great work, and now Wiley, the real story is Wiley just made a great purchase of some really quality assets, and I'd be very curious to see what they do with them. But if you overhype and underdeliver a technology, this risk awaits you. I brought an example of Google talking about AI in a market as an example of a marketing claim. Training data equals trust is the theory here. If you really have AI and ML and it's really effective, there will be something, there's usually a story that goes along with it that they go together. What is your training data? How did you find out that this worked before you asked to unleash it on my student population? I mean, this is a fair question from educators to people who are marketing this stuff. So just a quick meditation. One quick one on the CLR, a standard item. I'll just say this is there's 2 points here. One is, I mentioned that program change. University of Sciences as an organization, acquired APHIS as a platform for managing their programs. The objective here was to assess a program, bring together curricular and co-curricular information, and bring visibility of that to the student and the faculty and whatnot. You really want to find out, does this learner, do they have the classroom learning, and can they make it work on the mannequin? And they need to bring that together for everyone and on all the devices they're using. CLR, Comprehensive Learner Record, is a standard that's important in that data integration story. It's not yet released. The thing I was really impressed by, this was in one of the IMS prize applications, is this team decided we have enough in how this standard is developing already to do some kind of an implementation. Let's go ahead and roll one out. That's how I'm going to encourage we do more of that rather than less of that. The point of some of these things is get the conversation started and accelerate where we can. Reference implementations like this are very valuable. I think that's the challenge we have in this IMS context of, can we respond fast enough to what is happening in the marketplace to be meaningful? And so I thought this was a good example for the industry. I mentioned being with a number of companies. You don't expect a capital markets presentation. I'll keep it brief, at an IMS conversation. On the one hand. On the other, I think this is something, again, and what did I learn in the gig economy? I learned to value how companies grow, and something interesting about ed tech. We don't have very many companies like Instructure who just rang the bell, set the bar, gave us a wonderful example for the industry of being developed as a young company with insightful, enlightened people who knew how to help it grow, the support they needed in the venture capital community to be able to continue to invest ahead of the demand so that they could really accelerate and build the strongest possible company. You know, that capital was really important for them. They launched directly into large scale. They're worth $1.6 billion today, having come up that route. There's another route, which is remaining private, and that's private equity, but you have similar sort of stopping places. But Turnitin is an example of a company that's remained private for this entire time. They traded this year, and interestingly, they were valued at $1.7 billion. They and Instructure are about the same size, but they capitalize themselves differently. But because not very many companies in ed tech can get that big, you know, that notch below them, what I've labeled as growth equity, where venture capital comes up and where private equity comes down, you know, that's an area where it's important to develop. We need companies to be able to make it through that long putt from 25 million in revenue up to 100 million or better. You know, and the interesting thing about that is the market needs to have, because of the cycles that investors use, the market needs to have places where they can mature these companies up and have you know, a ladder, a stair step of capital to support them as they go forward. But as this is happening, there's more transactions in the marketplace and more claims being made. I have another little spotlight on the funny word investment. Sometimes you read a press release and it says, we've invested $5 million in startup A. And it's pretty clear that money is going to go, or some years are going to take some fees out somewhere, but the money is going to go into the company's going to invest it and grow around it. There are other press releases that are coming out that are, we invested $75 million. And where I know the details are not that $75 million in cash has arrived in a bank account. It was a share exchange. If I buy a share of stock from you, Instructure stock, Instructure doesn't get any of that money. You know, they get a marketplace. They don't get any money when I buy shares from somebody else. That exchange isn't generative. That's the kind of word that we need to be careful with as we talk about investment in our industry as a good, healthy thing. So as I say, not funny to confuse those two. Finally, I'll just end with a meditation. You know, there's a couple of things to meditate on. I do, you know, leadership team development, and it's always kind of boiling down to leadership strategy and culture. These are a few things that, you know, these are the things that when I think about them twice or three times. They always seem to cough up something else. It's important. These are heroes of mine. You know, the one, I'll isolate on just one, which is the strategy comment, and this is a mentor, my own mentor, Tim O'Reilly. You know, his statement, create more value than you capture, you know, I think is a really good one for product teams to think about, because I think it's the beginnings of its systems thinking, and it's thinking about value in a very abstract way, a very big way, and making sure that you're contributing to that. And so anyhow, I'll leave you with that one. And so we're out of time, but it's time to bring up the panel. So guys, we'll go ahead and join, and we'll